Thanks for tuning in to Tesla Shorts Time, episode 542 for July 15th, 2026. I'm Patrick, coming to you from Vancouver. Here's what you need to know about Tesla today. Tesla posted its best second quarter ever as the energy business spiked sharply higher. Tesla reported its strongest second quarter on record, driven in part by a sharp rise in energy deployments. The company also set the date for its upcoming earnings call. This result shows the non-vehicle side of the business continuing to scale while vehicle margins stabilize. Listeners tracking the energy program will want to hear how Megapack production and Powerwall attach rates factored into the quarter. The earnings call will provide the next concrete data point on whether this momentum holds. With the energy segment now delivering real scale, let's look at how the vehicle side is holding up on pricing. Kelley Blue Book data shows Tesla's average transaction price rose slightly in June to $53,107. The year-over-year drop of 2.1% is the smallest of the year, while the broader EV market fell 4.5%. Model Y averaged $51,775 and still accounted for over 35% of all EV sales. The report indicates Tesla has moved past the deepest discount phase while protecting margins better than rivals. While pricing stabilizes, software development keeps moving quickly. Software Update 2026.20.6.6 is rolling out with the latest FSD supervised branch. Early drivers are testing the new version on both HW3 and HW4 vehicles. The release continues the rapid iteration cycle that has defined the supervised program since the V12 series. Next data point to watch is how widely the update spreads before the next branch appears. Tesla is running distilled versions of its FSD models on HW4 hardware as part of the push toward unsupervised capability across fleets. The approach reveals how the company is managing inference across different vehicle generations. It directly addresses one of the open questions around whether current hardware can support the next regulatory step. Watch for any public comments on how distillation affects latency or edge case handling. On the hardware side, one fleet operator is already putting Tesla's newest vehicle to work. Paper Transport has added Tesla semis to its fleet under a new pilot program. The deployment is aimed at cutting emissions on specific routes while real-world range and total cost of ownership data are collected. This adds to the small but growing set of commercial operators testing the truck. The next milestone will be whether additional fleets sign on after seeing these early results. The Model Y continues to show similar real-world strength in passenger markets. The Model Y remains the top seller in Europe's growing midsize SUV category. Chinese brands have doubled their share in the same segment over the past year. The result shows Tesla holding volume leadership even as new competitors enter. It also highlights how regional demand patterns are shifting for the vehicle platform. South Korea's eco-friendly vehicle exports passed 100,000 units this period. The Model Y placed second in domestic EV sales despite limited local production. The ranking reflects sustained demand even as global supply chains adjust. It also shows how Tesla's core vehicle platform continues to perform across multiple markets. A separate report noted that a lower-priced Model Y variant brings the price down along with the content. Reviewers examined the entry-level version and noted reduced content compared with higher trims. The changes include simpler materials and fewer standard features. The test shows how Tesla is executing its cost reduction strategy on an existing platform. Buyers will weigh whether the lower price justifies the trimmed specification. That competitive pressure now extends beyond cars. BYD outlined its strategy to challenge Tesla in humanoid robotics with its own manufacturing scale. The company is leveraging existing EV production lines to accelerate robot development. This marks a direct competitive response to Tesla's Optimus timeline. Observers will watch whether BYD's approach narrows the gap in real-world deployment speed. Meanwhile, regulatory and incentive rules are creating uneven conditions for Tesla owners. California's updated rebate program excludes Tesla vehicles while including Rivian and Lucid models. The change stems from rules around manufacturer location and sales thresholds. Tesla owners in the state will not receive the $3,500 incentive available to some competitors. The policy shift shows how regulatory design can create uneven competitive conditions even for market leaders. Smaller operational hiccups also continue to surface. A pricing glitch caused some Canadian supercharger sessions to bill higher than expected. Tesla has begun refunding affected drivers. The incident highlights ongoing operational challenges in maintaining consistent pricing across the network. Reliability of the billing system will remain a watch item as open access usage grows. One owner shared a clip of FSD quickly swerving around a construction barricade that landed on the highway. The maneuver happened in seconds without driver input. The incident adds to the growing list of real-world edge cases the system is handling. It also underscores why owners keep sharing these clips as evidence of incremental progress. Discussions on Reddit noted that FSD V14 Lite remains in limited release even when it shows good performance on HW3 cars. Owners report that the limited release of FSD V14 Lite continues despite strong HW3 results. The decision keeps the branch from wider distribution for now. It raises questions about what additional validation Tesla wants before expanding access. The thread shows community patience is wearing thin on the pace of broader rollout. A rare early Model S Signature Edition appeared on the resale market with an asking price above $260,000. The listing highlights how certain low-mileage, early production vehicles retain collector interest. It also shows the wide range of values that exist within the used Tesla market. The outcome will test whether buyers are willing to pay a premium for historical significance. An experienced technician compared charging stops on a long Ioniq 6 trip and found Tesla sites added minor delays. The comment came despite the network's widespread availability. It points to differences in charging speed and site layout that some drivers still notice. The observation offers a rare non-Tesla perspective on how the network performs under real travel conditions. Lucid denied reports that it was considering bankruptcy after its stock fell more than 40%. The company's communications director issued a direct rebuttal to the earlier story. It also serves as a reminder of the capital intensity still facing the broader sector. Chamath Palihapitiya publicly stated that a Tesla-SpaceX merger makes obvious strategic sense. The comment came as TSLA shares rose overnight following several analyst target increases. The idea revives a long-discussed structural possibility without any confirmation from either company. Investors will look for any further signals in upcoming earnings commentary. Before we wrap, here's a quick counterpoint on valuation. The Motley Fool argues that another luxury automaker offers better near-term prospects than Tesla for investors focused on traditional vehicle metrics. It highlights differences in brand positioning and current product cycles. The piece reflects ongoing debate about whether Tesla's valuation should be judged primarily on its auto business or on future programs. Tesla will need to deliver visible progress on those programs to shift this narrative. Energy storage economics have long been framed as a question of raw cell cost per kilowatt hour. Tesla's latest quarter shows the energy segment contributing meaningfully to overall results, even while vehicle pricing pressure continues. The distinction matters because storage margins depend less on per-unit vehicle complexity and more on repeatable project execution and software services layered on top of hardware. When storage revenue grows faster than the auto business, it changes the capital allocation picture for the company as a whole. The conventional view treats energy as a side business that rides along with vehicle scale. In practice, Megapack and Powerwall deployments create their own demand signals through utility contracts and residential virtual power plants. These channels do not require the same distribution network or brand marketing spend that vehicles demand. The result is a margin profile that can remain resilient even when average transaction prices on cars are flat or declining. Investors watching only vehicle delivery numbers therefore miss the second engine that is already running. If energy keeps compounding at its current rate, the business mix inside Tesla shifts without any single headline event. That shift is what ultimately determines how much of future cash flow comes from hardware sales versus recurring services. Tomorrow, keep an eye on the earnings call for fresh details on energy deployments and whether vehicle margins continue to stabilize. That's your Tesla news for today. TSLA closed at $396.18, up 38 cents, 0.1%. If you found this useful, a rating or review on Apple Podcasts or Spotify really helps new listeners find the show. You can also find us on X at Tesla Shorts Time. I'm Patrick in Vancouver. Thanks for listening, and I'll see you tomorrow. And before you go, this show is part of the NARA Network, a family of daily podcasts on tech, science, and markets, each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen: Unintended Consequences, True Stories of Good Intentions That Backfired. Find every show free at naranetwork.com. Live dashboards, TSLA, SpaceX launches, the investing scoreboard are all at naranetwork.com/data. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.